Palantir, AMD, Spotify and Pfizer are just a few of the companies coming with their quarter results. And on Tuesday we have to watch the trade balance. How is the tariff war going? You're listening to the StockInvest.us podcast Trading Tips with Jim as we head into week 45. And this will for sure be a shorter one. In the $1,000 challenge where I try to grow $1,000 as fast as I can, NIO is back above 7 and the $1,000 challenge is again climbing, sitting just under $5,000 at $4,935. And I believe the week ahead will be a good week for NIO. The argument is very simple. Trump and Xi shaked hands, agreed that they will stall the tariff war, and Trump even reduced the tariff on China. That should ease all possible tensions and expectations, and meaning that the argument for NIO, electric vehicle company NIO, about all these tariff issues, where will it land, where will the cost be, is gone. And I just saw earlier this morning that several of the EV companies are recording extremely high front sales on new models into Europe, despite Europe trying their best, of course, to dampen the sales. This, I believe, this truth with China will open up for continuously growth in NIO, which did bottom out some maybe 6-7 weeks ago, and been on a very nice upwards trend since. I have NIO in the $1,000 challenge, bought it at 510, was a little early, a little high, but with 701 we are 37% in profit in NIO, and I hold a lot of NIO shares personally as well. In general, I believe EVs will do good moving forward, something I've been repeating over and over again in the podcast. As I said, some big companies are coming with quarter results this week. Palantir will for sure be one company that many follows. The company has been going extremely good in the market cap, just under 500 billion. We had several companies now reaching $1 trillion, and Palantir is on the way to the same. The forecast is that Palantir will increase their earnings per share to 12 cents from 6 cents year over year. We'll see how it goes, but these are one of the things that traders will look at. For sure, expect volatility. There will be a different price after quarter earnings, that's for sure. Either it's up or down. If you get it correct, you probably stand to make a lot of money. AMD will be followed up, and AMD is now being pushed. Of course, NVDA pushing about $200, which was my target for NVDA. And AMD is being pulled up. Things are starting to get more brighter for AMD, and AMD may be one of the companies that has a little bit more potential, knowing that NVIDIA has been pulling very hard, very long. They are expected to have 97 cents in earnings per share, up from 76 cents. The revenue will, of course, be what people will be watching, and the data centers, M1300, MI300 GPU sales are things that absolutely will be. I mentioned AMD because I think if you have to choose between NVIDIA and AMD, I think maybe there is a little bit more upside in AMD in general. At some point, these things will top out. And before talking a little bit about Spotify and Pfizer, let me mention that, for instance, I bought Tesla and NVIDIA. We have to go many podcasts back when there was a big scare. NVIDIA and Tesla fall hard. I sold my gold. For those following know that I sold my gold positions. I had doubled the money in gold from 1,600 to 3,000. I saw further upside in gold, but I saw even more upside in NVIDIA and Tesla. So I flipped my gold positions, bought into NVIDIA, Tesla. Both of them has doubled by now, and currently I will do the following. I will most likely today make the decision to go out of Tesla. You have to remember, I have doubled my money. And the reason why I will go out is because Tesla will vote whether Elon Musk should get a possible reward of $1 trillion in new shares. If we reach all the targets, the value of the proposed options will equal to 1 trillion. In media, this is spinned very, very differently, but people have to understand that in order to achieve this, he has to push Tesla 10 times in value. There are so many constraints in order to get these options that it almost seems impossible. It means that taxi will have to go, auto taxi will have to go perfect. It means that robot production has to go perfectly. It's not about Tesla cars as such. There is much more. Elon have been doing the impossible, and I believe Elon is the man that is able to do the impossible. Today, Tesla is making a lot of money. It's among the absolutely best in the car industry, but the value compared to what they make, still they make billions and billions of dollars, but the value is way too high if we look at it rational. So there is a lot of expectations in the price, the current price of Tesla. And I fear, because of how media has approached all of this, and we know companies like the Norwegian oil fund, which they have been going way with the Norwegian socialist government, they're going way to left. The social government has been pushing rules and regulations on the oil fund, keeping a high pressure to go very, very woke. And I will not be surprised if the Norwegian oil fund will turn down the proposition. And that brings me to the argument that I think there is a fair chance that this vote will not pass. The board, the elected board, they urge investors to pass it with the same arguments that I said, that in order just to get it, and this is not cash payment, it is into shares. First off, you cannot sell the shares for years and years. There is obligation about that as well. But to reach this target, if the company is able to grow in that matter, to get this to get the conditions through, the shareholders should be insane thankful if it happens. I think Elon is the only man to do it. I think there is a high chance that the election will not go in favor of Elon, and based on this, I think I will sell my positions, take my chance that it will be no. And if it will be no, I think the following will happen. Tesla will go on a downward spiral in terms of price. And when it hits a nice price, I will buy back in, because I really, really believe in Tesla in the long term. They have so much, but without Elon, it will be 10 times harder. Just to continue what the quarter results will come, this was just about not about Tesla. Pfizer will come. It is post-COVID and no big expectations for Pfizer at all. Pfizer will be on Tuesday, expected to reduce their earnings down to 66 cents per share after having 106 last time. Spotify will also come, and a lot of people will watch what Spotify is doing, how the subscribers are growing, etc. Qualcomm, Robinhood are also on the list on Wednesday. Especially Robinhood is a little interesting, I would say. And AppLovin, of course, is one of the companies that will for sure swing much during the day. Expectations is very high. They are supposed to double their revenues to 2.37 earnings per share dollars from 125 earlier. If this fails, hard to say. They are also very, very highly valued. Thursday with AMD and Monster will also come. Friday is for those who love a little bit more investing, not so much trading. Berkshire Hathaway will come with the results. No big expectations. The earnings per share is expected to be more or less the same, only 2 cents different. 470 this time from 468 last time. And the most interesting for everyone is, how does the portfolio look like? What are Berkshire and Buffett into now? So it's the industry really watches how they what they do and try to figure out how they are thinking. Constellation Energy will also be on Friday. There are some news, and I mentioned that as well. Tuesday you will have the trade balance. The deficit is absolutely getting much better. It's been much better than everyone has expected, and it's expected to continue. But Monday we'll start with some PMI numbers. We'll get a little more insight into inflation. Wednesday will be job numbers, oil data. For anyone interested in oil data, and I personally have invested quite much into not oil stocks as such, oil producers, but oil freight companies, etc. Especially freight companies. Because in my world, it's you read in the news now, everything is so bad. I see it very differently. All these tariff trades, all these talks, everything is making the groundwork for real good trades between countries. I think the trades will pick up drastically. I think energy will pick up drastically. The need for energy is higher than ever. And I just think this industry will have enough to do. The rates will be very nice. The dividends will be exceptionally nice. That is why I did position myself into this industry a year ago. And I think it will just continue. Frontline being one of them. Frontline been climbing steadily, and dividend is very nice. Frontline can be traded in Oslo, can be traded also at Nasdaq Stock Exchange. Thursday will be the jobless claims number. The jobless is expected to go a little up. We read a little bit all over the news that companies are reducing their work staff. Most of it has to do with the fact that salaries have increased quite drastically, and the other thing is AI is starting to pave its way in with efficiency. Friday, not so much. It will be a year-over-year unemployment expected to be 4.4%. Nothing big. And for anyone that wonders about the unemployment rate, you have to remember the following. During the Biden presidency, a lot of money was put into subsidies of different kinds, benefits of different kinds. A lot of the workforce went out of the work market. I think US had the lowest active workforce it ever had post-war. But participants are slowly getting back. People are slowly getting back into work, and of course, when you then go back to when more and more decide to go back into the work, more stays unemployed. So there is still nothing drastically about the unemployment rate. It's been slightly ticking upwards after being a record high under COVID, of course. Then it fell quite drastically, and now it's been ticking a little bit up. I personally think that unemployment rate will soon start to shift and go downwards based on the huge amount of investments, especially in US. A lot of new works will be created. We see a shift in the economy. There will be more inland production in US. China just agreed to buy tons of soybeans, and all of all of these things will slowly start to show in the data. There is always a delay. That is why we have seen a lot of different pain over the last few years, because the decisions made 5 years ago, 4 years ago, they are still hurting us. It will take some time to turn the ship, but I think it will come in quite nice. And that brings me to the last two item tickets. Last week I thought it would be a green week. What do I think about this week? Well, if you look at the chart, we can see that Nasdaq has topped out at just under 24,000 points, 23,900 something it topped out. Found a pivot top. It was the top of the trend. Total natural reaction, now turning a little bit back. There is a high chance that it will go to 23,000, then turn up. RSI is starting to get high, or it just turns up from current level, because it has support at current level. I will not be surprised if we head back to 23,000, then continue upwards. Everything, absolutely everything in this chart indicates that Nasdaq will go to 25,000 before Christmas. insane support between 23 and 22,000 points, and something exceptionally bad has to happen for that to break. Of course this can happen, we know this can happen. I'm just saying that based on everything I see, it's a higher chance that Nasdaq will continue up and down. But I said last week I thought it would be a green week, not so sure about this week. Last week Nasdaq was up, or so far this week, because this is the Friday in the end of week 44. Podcast will be published during weekend, so you are ready for week 45. And so far Nasdaq is up 1.62%, Dow Jones up 0.67%, and S&P 500 up 0.46%. Today, hard to say how it will play out, if it will be green or red on the Friday, but most likely the week as such will end green. For next week, there is 50-50 if market will go up or down. If I look pure technically, I would say that Nasdaq should go down to 23,000, but that can happen today, and from Monday we just start to push upwards again. Or it can be that it will be somewhat uneven day to day, then Monday, Tuesday next week will start to be a little red before turning green by the end of the week, but overall going down. I would say it's 60-40% chance that we have a red week next week. I have a hard time to see something really push up. With trade truce, everything is made, but I think a lot of reallocation will be now happening. A lot of stocks are getting very high priced, and I think a lot of reallocation will happen. I think a lot of the stocks that hasn't moved on Nasdaq will move high, because if you look at the buy and sell signals at Nasdaq, we can say that 16% are giving buy signals very low. It means that some companies have been driving the last upturn, and these are of course the big one, meaning that there is plenty of stocks to be picked up, especially at Nasdaq, and I think that will happen. I think that will be the rally that we will see until Christmas. The smaller companies at Nasdaq will push up. You have been sitting waiting for a lot of your stocks to go up, watching Tesla, watching NVDA, watching all of these just push upwards and not understanding why your stock hasn't been. It's just how the focus is. Now I think it will shift, and I think that the smaller companies will start to push. At the end of it, maybe in the Christmas rally, will be the penny stocks going totally off rail. We have to see. That is what I think will happen for the next week. Let's say I go for a red week. Next week I think it will end down, so you know at least, but not by much. But I think we have to go down to 23, then start to push up, just so you know what I think. Across all the signals that we analyzed, 31% hold buy signals. There is nothing special in this. There is nothing special in the other numbers. New York Stock Exchange 26, London 37, Oslo 21. Most of them have fallen a little bit because a broad amount of stocks have fallen back a little bit. National Stock Exchange of India 28, Frankfurt 50, and Shenzhen China 24, Tokyo 28. All of these says to me there is no overbought situation, there is no oversold situation, there is no really good time to sell, there is no really good time to buy. A few of them, like Nasdaq, has very low values, meaning there should be a lot of stocks with upside, and you have to choose how you play it. I usually in the podcast say something about the future, and I already mentioned what I think will happen. I will not be surprised if we are in for the best decade ever, but there will be a Kodak moment, and it is very close, because AI is getting so sharp, so much better, it will change. And by Kodak moment I mean the time when Kodak decided that everyone will still print on original paper. Digital is just a hype, and the day after Kodak was more or less out of the picture. This will happen for a lot of industries. We see car industry in Germany is struggling. It's almost nothing left of the big giants, Volkswagen, etc., Mercedes, all of them. Germany is super struggling, while Chinese cars is pushing ahead at extreme speed, Xiaomi being one of these. And there is a shift, and you have to try to think how will this shift, this EV shift, how will this AI shift affect all the things, and invest accordingly. I promised a short podcast, which means that I will jump to the $1,000 challenge. Before doing that, I just have to say that oil is at 60. dollars per share. I think oil will continue downwards. There is a little up and down right now, but in general, oil and energy will be cheaper, fueling the world energy and bringing good things to the economies. Gold 4024 was down under 3,000, under 4,000, 3,920 I think I saw yesterday. I think gold will continue downwards. I will maybe get back into gold around 3,500, 3,000, but I cannot see why gold should be continues to be high, because all the uncertainty is fading away at almost record speed. The one thing that holds it up is the depth. 10-year Treasury yield 409 climbed up a little bit, and I saw somewhere that US is thinking about printing up 1.5 trillion more US dollars. This money printing is an absolute issue. I'm not exactly sure how it will play out, but it argues for crypto, it argues for gold, and it argues for a few other things. But we have seen crypto just being steady, stalled, doing nothing, maybe a little bit down overall. Crypto market seems very, very slow at the moment. Also think that will pop up. And this podcast with the NIO in the $1,000 challenge made us grow $1,000. Not NIO, because there was many shares before NIO, but so far NIO has brought the $1,000 challenge up to $4,935.45. It was up at 5,555. I believe we soon will be there. I will be staying in NIO because I see the high chance for NIO to continue upwards. Go 3-4 podcasts back, you hear me say that I think NIO will have to take a turn down to 650. That should be a very good buy point. Then it will push upwards and it will push up above 8. I think that is exactly what will happen now. Will I be correct? Will I be wrong? I don't know. But as I said, I will stay in the $1,000 challenge. I hope you, my friend, will have a beautiful weekend. And I hope that next week will be a very good week for you. I hope that you like the podcast, that you will like and subscribe if you haven't done it already. Last week's podcast was much more about how I trade. I recommend you to listen to it if you haven't done it. Got few views on my YouTube channels. It's distributed on StockInvest YouTube channel in general, and Spotify across everything. I think it reached around 800 views or something, 800, between 800 and 1,000. But I saw a lot of people liked it, which I'm very, very happy about. See you next week, and hopefully your portfolio will be much greener than it was in the beginning of the week. Bye.
Welcome to StockInvest.us stock analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information, you agree and are held liable for your own investment decisions.